Hey guys, in this video I'm going to discuss leverage and margin, and I'm going to go over the difference between them and whether or not you should use them in your trading. And of course I'm talking about for penny stock trading and day trading. The thing is, a lot of accounts, when you open up a brokerage account, you're given an option. You can either make a cash account or a margin account. And then there's different terms and terminology like buying power and margin and leverage. So I just want to clarify for you guys right now. So usually when you open up a brokerage account, the normal account that you're going to start off with is called a cash account. Okay? And this is when you fund the account with normal cash, and generally speaking you trade with that cash. So you can only buy or sell up to the amount that you have in the account. So if you fund it with $2,000, you can only buy $2,000 worth of stock, which makes sense. Okay, now this is where it starts getting a little complicated though, because if you've done any type of trading, whether long term, short term, or day trading, you'll notice that when you buy and sell, it takes a few days for the money in your account to settle. And then the issue with that though is that if you buy before the money settles, so say I buy and sell in a single day, okay, it takes a day or two for the proceeds from that transaction to be given back into my cash account. So what happens is, if I don't buy, if I choose to buy again, then I am trapped in that trade and I cannot sell that position, that second position, because it says that my money is being settled. Okay, so the way day traders get out of it, because if you're a day trader, you need to be able to have money to to get in and out of trades. Okay, so especially in the penny stock market, you can't really do well in it with a cash account. So what people usually end up doing is upgrading to a margin account. Okay, now margin account for most brokerages, TD Ameritrade, SureTrader, it requires at least $2,000. So once you have $2,000 in your account, you apply. You just fill out a form. They just ask basic information. They'll ask you stuff like what's your earnings and stuff like that. But I don't think it's really too judgmental. I guess most people get accepted as long as you have $2,000 with the account, and I guess you don't have awful credit or something. But in general, I've never heard of anyone who's had a problem with getting upgraded to a margin account. It takes a few days, and now you have a margin account. And the good thing about that is you're able to trade without having to worry about waiting for the cash to settle. So as soon as you buy and sell, you'll have the proceeds available to buy and sell again. Okay? Now, this allows you to be a successful day trader because you can buy and sell, quickly get in and out of positions. However, you're still limited by the day trader rule. Okay, but before we even go into that, okay, so that's what margin is. Now the issue is there's a concept called leverage too, which usually you gain access to when you upgrade to a margin account. Alright, and leverage, it doesn't talk about it here, but leverage is basically the concept of buying power. Okay, so if you have $2,000 in your account, what usually happens is most brokerages give you two times buying power, and what that means is that that's almost leverage. So if you have $2,000 in the account, okay, and you have a margin account, you get buying power worth of $4,000, which means that you can spend $4,000 on a stock even though you only have $2,000 in the account. Okay, and that's kind of the concept of leverage. So the main message that I want to give to you guys is, do not deal with leverage. Okay, even if you think you're about to enter the best trade in the world and all the factors and everything is right, do not bother with leverage. Okay, people have become rich without trading leverage. You don't need it, and it's dangerous because you're trading with money you don't own. Okay, it's not your money, and the problem is with margin accounts is that, with trading with leverage, is that you're at the mercy, not mercy, but your broker can call in your trade at any time. Okay, so first of all, if you're going long, there's no reason to borrow extra money. Just only buy with the amount of cash that you have in your account. Okay, now the reason buying power becomes an issue is when it comes to shorting. Okay, so because when you short, your risk is almost unlimited, unlike when you go long. When you go long, the worst thing that can happen is that the stock price goes to zero, in which case you lose your entire investment. But with shorting, you're required to pay back a certain amount. You're basically taking a loan. And so that's why buying power becomes dangerous when it comes to shorting, because if you if the price goes up and you're trying to short, you might be forced to deposit more funds, and this is called a margin call, and leads to a short squeeze. Okay, those are things that I'm going to go into more detail with in future videos. But in general, I just, people ask, should I trade with margin, should I trade with leverage? I hope that clarified it for you. Margin is good, okay? Upgrading to a margin account is necessary, but leverage is bad. You do not want to, trade with leverage. You don't want to involve yourself with leverage, because, that's pretty much how the banks make money off of you, and it's not necessary. Okay, if you follow my strategy, be conservative, be safe, you'll make gains, understand the trades, grow your account. If you follow my trading patterns, you'll grow your account exponentially and you'll make a lot of profits. Just follow the rules and learn. There's tons of people that have made money from penny stocks, and you can be one too if you follow the rules. And none of those people have used leverage. I've never used it. You shouldn't either.